We have seen a massive rally in Bitcoin because of demand through Wall Street. We subsequently saw Ethereum going up, again because of Wall Street. Is there going to be another rotation into Solana? Solana has been lagging behind in the last year, and maybe that's an opportunity. Let's have a look at the data most people are not considering. Now, in the last year, Solana went up by 33%. Bitcoin, on the other hand, went up by 77%. This here is Solana dominance. So how much of all of cryptocurrency's market cap is currently in Solana? After the initial adoption, we saw the start of the bear market triggered by DeFi winter. Within that winter, we saw FTX going belly up. At the time, FTX was a strong supporter of the Solana blockchain. Subsequently came the recovery with the Memecoin trading frenzy. And in the last 2 years, we are trading in a range. And within that range, we've just hit an upper bound. The current momentum isn't too positive. There's potential to underperform by 4%, but if we were to suddenly turn around, we could outperform by 26%. But really, it looks like the market is deleveraging again. It seems like the market is moving more and more risk off. The three major blue chips in crypto are Bitcoin, Ethereum, and Solana. And currently, after the initial hype of Ethereum treasury companies, where ETH outperformed by more than 115%, we now see profit taking. And Ethereum tends to go down as well. And so who's benefiting from this? Bitcoin is. Bitcoin is the least risky of the three. Money is flowing from Ethereum and Solana back into BTC. And in the past, we only saw an altcoin rally once Bitcoin dominance was close to 73%. We haven't hit the 73% yet. The dominance drop over here was the Solana run up because of pump.fun, because of the meme coin trading. The drop over here was because of Ethereum and the purchases through Tom Lee's Bitmine. But those purchases have slowed down, and so money is flowing back into Bitcoin again. Really, the question is, how much longer will the market stay cautious? Because if Ethereum dominance goes all the way down to 7%, then Solana relative to ETH could fall even further. We have seen similar volatility in the past, and we are currently just on track for a similar deleveraging. Now, is this the most likely scenario? Let's have a look at the on-chain data of Solana. This here is the total value locked. So how much capital is currently on the Solana chain? And this actually doesn't look too bad. Yes, we had a massive run up during DeFi summer and then the subsequent crash during DeFi winter. Have a look at the magnitude of this. This went from 10 billion all the way down to 200 million. So a crash of 98%. Much more than what we had with Bitcoin or Ethereum. But currently we are going up again, or at least it seems like this. Now have a look at the total value locked measured in Solana. Here we do not see any expansion anymore in the last 5 months. Since April of this year, this is just going flat. And it's also April of this year where Solana dominance started to fall again. I do not think that this is a coincidence. But maybe this is just profit taking and maybe this can turn around. But I'm not so sure, because when we look at the number of active addresses on Solana, that's actually coming down since November of last year, and it continues to shrink. Why does it shrink? It shrinks because pump.fun tends to shrink. This is the number of deployed transactions on pump.fun. This peaked in November of 2024 and since then tends to come down. There is of course the newly launched Pump Swap, so a new decentralized exchange just for pump.fun tokens on Solana. And apparently there's a lot of usage. But again, I've got my doubts when we look at the numbers. In the last 24 hours, we saw close to 10 billion worth of trading volume on the Solana chain. Of that, 7.3 billion are just on pump.swap. Now have a look at the recent trending tokens. We've got CNUT. Over here are 11,000 wallets that interacted with the token in the last 24 hours. But how many people actually hold the token? It's less than 3,000. I have a look at this token here, Pibble, again 6,000 wallets that interacted with the token, but only 3,000 current holders. So it seems like there's a lot of wash trading happening on Pump.swap. A lot of bots that go in and out, maybe bots that are deployed directly by the project, or maybe by people that want to push up the project further. It clearly doesn't seem organic, given that the number of active addresses is coming down, and given that the total value locked measured in Solana is not going up anymore either. The fundamental problem is really the magnitude of those bear markets. We cannot buy Solana just to hold it long term, because again, SOL can go down massively. And that's because of the inherent leverage in DeFi. This is now the total across all blockchains. There is a growing trend of people betting with leverage on various crypto assets. And some crypto assets are affected by this more than others. Those bets are called perpetual futures. They are derivative contracts. And what we see over here is the open interest. So the amounts of bets that are currently on Bitcoin. And while this did grow slightly faster than the price, so by roughly 2x in the last 4 years, it's not too bad of a divergence. But have a look at the same chart on Solana. Here the price is very close to the all-time highs, but the open interest is very far away from the all-time highs. The open interest went from 1.7 billion all the way to close to 17 billion, so a 10x. And the problem is that arbitrage bots impact the spot price when there are bets via perpetual futures. So this is all short-term capital. Everybody that wants to hold Solana long-term just buys it spot. People that want to bet on Solana very short-term though, they might use perpetual futures. And so that's the problem with ever-increasing leverage. As leverage goes up, it needs less and less volatility for potentially triggering a cascading downward spiral. The first person gets liquidated, that creates sell pressure. Another person gets liquidated, that creates sell pressure. And of course, that sell pressure is first on the perpetual futures, but through arbitrage bots, it also goes over to the spot market. There is correlation between the two numbers, right? When the spot price is high, there's also more open interest. When there's less open interest, then the spot price tends to go down as well. So when all of that leverage suddenly exits Solana, then the Solana price will crash very quickly. And then maybe a 98% drop, as we have seen in the past, doesn't look that unrealistic anymore. It looks like the absolute edge case right now, but this can change on a dime. Again, there's so much leverage in Solana, there's much less leverage in Bitcoin. Bitcoin is so much healthier. I don't trust all of that trading volume. I don't trust the 7.3 billion trading volume of Pump.swap. The numbers don't add up, and the ecosystem is at least stale, if not even shrinking. Now here's something I want you to avoid. Please do not follow people that tell you that there's the next 100x cryptocurrency where you're getting rich quick. Because you might have read about the statistic that 99.6% of Pump.fund traders, so traders of smaller meme coins, did not realize a profit over just $10,000. The vast majority of people lose. The winners might be among those influencers, the winners might be among the insiders, and the rest is simply burning their money. And so because of that capital concentration process, because more and more people lose their money, ecosystems like Pump.fund tend to shrink when there's no new marketing. And so what's the solution here? Because we want to make money over time, right? What's actually realistic if we can't make our 100x? There is a simple conservative solution. It's just dollar cost averaging. It's buying $1,000, for example, every month into something like Bitcoin. So do this for longer than a cycle, so for more than 4 years, in this example 6 years, then the performance looks like this. So had you dollar cost average into the S&P 500 or into gold, you have gotten this performance, but by buying into Bitcoin, you're getting this performance here. Now the time horizon matters here, right? Because there are bear markets. We include here a bear market where Bitcoin went from almost 70K all the way down to 16K. So at that point, the performance of the S&P 500 and gold and Bitcoin were very similar. But if the time horizon is long enough, then just within 6 years and just $1,000 per month, a comfortable nest egg of 360K can be built. It's not sexy, it takes longer, it takes effort, it takes contributions. It's not getting rich quick, but it's getting rich consistently. Now, I'm a fan of beating this, of course, because the crypto market is still very inefficient. But it's not inefficient in the way how you might expect. I am dollar cost averaging into my trading portfolio as well. This is my active trading portfolio measured in BTC. And my plan is to get to 8 Bitcoin within the next 2 years. Now, I didn't just buy Bitcoin with my trading portfolio. I actually did do active trading that did outperform buying and holding. I got this alpha here. So had I not dollar cost averaged, if I just paid into the trading portfolio once, I would have roughly doubled the amount within 48 years. So because I didn't just buy into Bitcoin, but I did do active trading, I'm now close to 5 Bitcoin and not just close to 2.5 Bitcoin. So what's more important? Is it the trading? Is it the regular contribution? The answer is both is important. At the beginning, the regular contribution is more important. At the end, generating the alpha is becoming more important, right? Because once this is at 3x, not just at 2x, then 2/3 of the Bitcoin in the portfolio is just due to alpha and is not due to dollar cost averaging. So both is important. Contributing is more important at the beginning. Trying to outtrade everything when the capital base is still small is not the smartest idea. Again, you've got a very high likelihood of losing it all. And so I'm actually doing the exact opposite of what most other people are doing. Most others try to find the next best altcoins. They have maybe a diversified altcoin portfolio, 10, 20 altcoins, and they try to beat Bitcoin that way. But more often than not, this fails. If you listen to people like this, how ApeCoin will be the next 100x investment, this video was published 8 months ago, then you would have underperformed Bitcoin by 44% since then. Now, this is not just in the last 8 months. Have a look at what ApeCoin did prior to that. It just underperformed Bitcoin extremely consistently. And so that's how everybody gets wrecked. That's how the majority of people lose. Most people buy things that get recommended by influencers, and very often those influencers get paid by the different crypto projects to do that marketing. I, by the way, never take any money from any crypto project ever. The only money that I take is from the premium members that support this channel here. But more of that in a second. Here's the reason why ApeCoin did so poorly. The supply increased over time massively, and the early insiders at the team, etc., they get token unlocks over time and they dump those unlocks on the market, which makes sense when your token performs like this relative to Bitcoin. So this as well is a self-fulfilling prophecy. If most people expect a token to do worse than BTC, then the selling pressure will just continue. And so my approach is to just flip this whole thing around. So instead of trying to find the best altcoins and buying them and having a diversified portfolio of altcoins, I'm just betting on falling prices of altcoins relative to Bitcoin. So I go long Bitcoin, I bet on rising prices of Bitcoin, and I go short the altcoins that are extremely poor in long-term performance. So instead of this chart, I've got the performance of this chart here. So there's now Bitcoin relative to ApeCoin. And what we see here in white, that's just the Bitcoin price. As in, Bitcoin does have its drops, but relatively speaking, since ApeCoin is so inflationary, it tends to do so much worse. And so over time, it tends to just very constantly outperform just plain old holding Bitcoin. So there's a better strategy to just buying and holding Bitcoin. There's a better strategy to just dollar cost averaging into Bitcoin. And it's not finding the next 100x altcoin. It's betting on falling altcoins because the insiders are cashing out constantly. That's actually how we can beat the market. And that's what I'm doing for the last 4 years. And so I want to share this strategy, of course. It's not as straightforward as just buying an altcoin. We do need to use decentralized finance applications. We do need to do some risk management here. But long term, again, it's worth it. I have made many tutorial videos on the topic, but in the end, you only need 2 videos, 2 very important videos just to copy trade what I do. So that's this video over here, using perpetual futures to bet on relative valuations, and this video over here, risk management with relative valuation bets. Those 2 videos in total amount to roughly 1 hour of content. after you've consumed this content, you can do bets like this. Now, many altcoins are inflationary, and so there's many such opportunities. I also have one favorite trade where the outperformance is very, very constant, where the volatility is very low. I will share that favorite trade once you join. So after you've watched those two videos and you've joined the community, I will share my favorite trade. And if that favorite trade does not make money after 1 month of holding, then I will refund the premium membership fee for you, no questions asked. So it's currently $125 per month, and if you don't make money with that trade in that month, you will just get that money back. So you're not really risking that money, and you can watch all the tutorials in premium, not just the two that were mentioned here. So feel free to explore premium without any risk. A link to the website should appear directly here on the screen. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.